Thank you for joining me. To kick off things, I wondered if we could just go through the panel, tell us who you are, what are you doing, and we're going to stop there, and then we're going to start talking a little bit about starting a business, why starting a business, how does it feel to start a business, and then a little bit about the crypto space itself. So, Nick, do you want to go first?
Sure.
And shout.
I will. So my name is Nick Niedermover. I've partnered up with Michael over there. Together we are launching a crypto asset manager, Prime Factor Capital. And we basically want to bring our backgrounds in kind of in traditional finance, institutional asset management to the crypto space. And I'm quite excited about growing the business.
Jay?
I'm Jay, and together with my co-founder Sid, we're building Token Analyst, and we're on a mission to bring transparency to this space. What I mean by that is, the main quantitative information people talk about today when evaluating crypto assets is like price and market cap. We look at the data on the blockchain itself and are trying to come up with true fundamental indicators.
Hi, I'm Tom. I'm at Credit Mint. We're up there. There are four of us, as Arno, Zach, and Joe are my other co-founders. We're looking to put most illiquid assets that are locked up on balance sheets, on banks and in funds, onto a public blockchain.
Oh wow, you're much more short than I was expecting. I thought it was going to take you 5 minutes each to describe your businesses, but fair enough.
Okay, we're not doing an ICO. That's the other.
That's your other. I want to start with something that has nothing to do with crypto necessarily. I think many people here in the audience are interested in the space, but you could join an existing business, you can find a job. Why did you decide to start your own business rather than join someone else and start a business?
Yeah, so I mean, in my case, I've actually, I set up another crypto trading business a little over a year ago. So that's a business that provides liquidity to crypto exchanges. So for me, it was kind of, at that time, I just felt the crypto markets had got to a point where it was worth taking a punt on launching a business that is doing something in that space. I mean, I've had an eye on the market for a number of years already. And I felt for that kind of thing I had in mind, it had got to a stage where it was worth taking the plunge and setting up my own business. And I think over the course of the year and the huge kind of, just the general, well, it's not just the price, it's everyone talking about it, venture capital flowing into the space, it became clear to me that this is probably the best opportunity to really move into the space 100%, and that's why I joined EF, to really evaluate what the options are. And in the end, after some ideating, we decided to set up a crypto asset manager to really give professional and institutional investors also the opportunity to get exposure in the space, and not just retail investors who so far have been signing up on exchanges and try to get involved in the crypto space.
Nick, you've already started a business on your own. Why? You've already have the experience. Why did you decide to apply to EF rather than just go on your own again outside this institution or this program?
Yeah, I think so. One of the points, obviously, is that you get the opportunity to just take a step back and get some advice from people who've done it before, who've helped launch a number of businesses. And you also have the opportunity to find a co-founder, somebody who complements your own skill set, to build a business more quickly and possibly a better business than you could build on your own.
Okay. Jay, why did you decide to start a business?
Yeah, I mean, I've worked my whole career in tech and startups, did another business before this a few years ago, so I guess starting a business was not even a question. I was going to do it. But why specifically this? I think it's like...
What do you mean starting a business, no question? Or you always knew you were going to start a business?
I did it in the past, and I think my entire career was kind of geared towards building skills to take the leap and start a business.
Okay.
I started a business because I'd done undergrad and postgrad maths at university, and I was always being threatened. I was being told, you're presented with a problem, and you're being threatened with the very likely possibility, in my case anyway, that you couldn't do it. And I like being threatened in that way, and I think it's something you feel very unthreatened when you're turning a handle in the kind of traditional economy. I was in accountancy, I was in a fund. One of those was a less than successful career. And I just found turning the daily handle, I was never being forced to think about something originally. Why blockchain? Well, I think actually it's a fairly rare opportunity to tear up a relatively large portion of the economy and put it back together again, rebuild it. I use the phrase sometimes, depending on how strong I feel the investor's feeling. I go to investor meetings and I talk sometimes about monetary collapse, which goes down sometimes well and sometimes less well. But we think that blockchain has the capacity to massively reduce the amount of money flowing around the economy. I won't say it again, but one of the reasons we're against ICOs is it's in total contravention to that philosophy. For us, actually, it's the collapse of the money supply that's extremely powerful about blockchain, and so that's what actually we're trying to help bring about at Credit Mint.
I feel that we spoke about your businesses, and maybe people already know, but do you mind again explaining exactly what is Credit Mint? What exactly are you trying to do? Maybe take a minute or two, what is that you're doing?
So when I was working in this debt fund, I realized there was a huge amount of capital, order of trillions actually, locked up in relatively obscure balance sheets held by funds or by banks, and realized that what this is an opportunity to put a lot of borrowing, a lot of leverage, and a lot of risk and fees into these sections of the economy. So what we're doing is we're enabling smaller, more competitive lenders.
So you saw a lot of loans on balance sheets of banks?
Yeah, banks.
Sitting there.
Yep, and to some extent, some very large funds as well. And there are smaller players wanting to get into that lending space.
What do you mean? Do they want to buy the loans? Do they want to lend themselves? What are they trying to do?
Ultimately, they want to issue them. So today, if you're a business of a certain size, you pretty well have no option but to go to one of 10 or 11 major players, all running balance sheets in the order of $1.5 to $2 trillion. That's the only place you can go to get some credit. But what's actually happening is this economy, actually much more in the US, but to a degree in Europe as well, the economy is now being fueled by smaller lenders who can club together and provide that debt to the company in question. And so what that means is now you don't require the banks. Sorry?
Where do they get the credit from?
They get the credit from equity that's given to them normally by big institutions, but increasingly even by retail investors. So actually there's a company called Wise Alpha who are doing great things, who are taking retail money and putting it straight into credit on a company's balance sheet. There's nothing standing in between the holder of the capital and the debt.
So are you a peer-to-peer lending?
No, we're providing the infrastructure. So we're building the roadways. We're building the blockchain infrastructure to make it mean that it doesn't matter whether you're a small lender or a big lender, your economics should be broadly the same. You can lend to a big company every bit as much as a major bank.
So why can't we just go to Funding Circle and kind of lend them money and they're going to lend to the industry?
Well, Funding Circle's one institutional house. So they've got one pot of money, but there's nowhere near enough capital. You can't assemble a major $250 million loan out of Funding Circle. It's just not possible. So we're never running a balance sheet. We don't have a debit. We don't have a credit. We're just providing the infrastructure that allows one shared ledger for every potential lender.
Okay. Nick, you mentioned that you're starting a fund. Can you walk us through what do you mean by that? I mean, why just not buy Bitcoin, Ethereum, a basket of other coins? What do you mean by starting a fund?
Yeah. So we are basically looking to provide a vehicle or longer term, several vehicles for institutions and professional investors like family offices and so on, alternative asset managers that want to get exposure to the asset class, to do that in a secure, compliant and transparent way, solving all the operational issues around cryptocurrencies and bringing our expertise in the markets to the table, as well as Michael's background in institutional portfolio management. So it's something that I think that the space has been lacking. Institutions have been very slow to embrace the space.
Institution? When you say institution, who do you have in mind?
So I'm really talking, as I said, I think from family offices all the way up via alternative asset managers to potentially one day really the big players, literally the BlackRocks, Vanguards, and Fidelities. And they've all come out, said it's too early for them to get involved. I think they're all looking at the space. But there's kind of a certain vacuum to be filled at this stage. And we are looking to get in there and provide investors at least with the possibility to get exposure.
How do you select which currencies or token assets or crypto assets to then invest in?
So we are taking, to begin with, a relatively passive approach. So we want to give exposure to the asset class itself. So we are not looking to generate alpha. It's very much, if you want to take your first step in the space, it's about getting exposure. And so we're looking at having a market cap weighted vehicle and strategy that's not unlike what you would know from an index fund or ETF.
Cool, thank you. Going back to the kind of question of starting a business or not starting a business, it's very early on in this journey for you. I mean, you're 6 months into the experience of creating a business. I mean, maybe Jay, what's the best thing about launching your own business versus anything else that you did before?
So I guess probably the best thing about it is the feedback you get from customers when you are able to create some sort of value and actually execute on your own vision. That's great. So kind of what we do is, institutional investors invest in these assets, but they don't have real fundamentals. So we provide this data, we provide them with analysis, and then they come back to us, and this investor calls me on Friday and is like, Jay, like this analysis you provided really helped with guiding me to invest in this coin versus this other coin. So that validation from the end customer when you build a product is probably like the most fulfilling part of this journey, for me at least.
So you mentioned that you speak with investors and they said that you help them to decide which this is gold, you have to decide which coin to invest in. So how do you do it?
So yeah, that's a great question. So, if early in January there were two tokens, like one was called Denta coin, the other one was called Omise Go, and they both had a market cap of 2 billion. And if I gave you $1 million and told you to choose one or the other, there's the only data you have is kind of what you see on CoinMarketCap. So what we do is we go deeper, we go below the surface. We look at all this stuff that's happening on the blockchain, all these transactions, all these patterns and smart contract calls, and we make sense of it. On aggregate, we create these ratios like token velocity and centralization. These are ratios that are at the cutting edge of crypto economics today. And so we provide these ratios in a digestible format for, right now, institutional investors and help them guide their investment decisions.
How do you do it? I mean, how do you get this? Isn't it anonymous? I mean, how can you actually get data from the blockchain?
Well, thankfully, I'm working with Sid, whose research is in this part of machine learning called unsupervised clustering algorithms. So we look at patterns on the blockchain, and we cluster these millions of addresses. So we're able to tell you with some degree of accuracy if these are bots or humans or whales. So from my earlier example, what we noticed was in this Denta coin, 90% of the transaction was initiated by bots. They were just pumping and dumping this token, while Omise Go had true fundamentals. So this is kind of our secret sauce and the core of our technology.
Tom, what's the best thing for you in terms of kind of starting your own business versus working for a fund or being an accountant?
Well, the best thing is the autonomy. And actually, Zach and I have just come back from, I'm going to take no credit for this, but we've just come back from a meeting with a professor of cryptography at a big London university. Zach, and I say this wasn't my experience.
Zach is your co-founder?
He's my co-founder, yeah, he's CTO at CreditMint. And he knew, 2 months ago, he knew the square root of sod all about cryptography. And in the last 2 months, I often sort of use the phrase séance because there is no other word for it. He started smoking at the ears for about 6 weeks and created a cryptographic protocol that provides a zero-knowledge circuit. I won't say a SNARK, but a circuit that allows us to fully encrypt but actually still test on a public blockchain transactions. So they're fully private, and yet the blockchain is still able to say, yes, good transaction, no bad transaction. That's an incredibly powerful thing. Now, that is something that Zach in his last job would never have been called on to solve. It really is some cutting-edge cryptography, and I think it's being forced to solve these potentially insoluble, or not insoluble, but previously unsolved problems that's incredibly appealing about starting up your own business in something you're much less likely to be faced with in a normal job.
It's the freedom of doing.
It's the freedom and being threatened with potentially sort of, the risk that your existence, you may not be around next week is actually quite thrilling. I shouldn't be saying that with the funding team in earshot, but
it's fine. We know the business. Nick, you've done, it's your second business. I know that you worked before for, I think you've been a trader. You worked for big companies.
Yes, indeed.
What's the best thing about starting your own business?
Well, I think it's really to be able to drive forward your own thing much more quickly than you maybe can in a bigger organization. You can react much more quickly what let's say is happening in terms of development, especially so as you said, I come from an energy background. It's a relatively conservative industry. And if you compare that to cryptos, I mean, there's so much more innovation going on in this space, and it's so much more fast-paced. There's much more happening and much more opportunities as well. And I think if you're strong technically, you've got a passion for what you're doing, I think starting your own business can be one of the most rewarding things you can do.
Okay, so it all sounds rosy and lovey-dovey, like freedom, speed, feedback. What's the worst thing about starting your business? And be as honest as you possibly can. What's bad about it?
I think you get told no a lot, right? You get told no by customers. For that one customer who actually called me, there's probably 80 who said no first. You get told no by investors. You kind of question what you're doing. You end up building a product for a month and then no one likes it. So there's a lot of no, and you have to have thick skin, and kind of what you're saying, you have to be passionate about going on. So just to poke at Nadav, the first week when we met Nadav, he was like, what is this token data thing you're building? Like, it doesn't make any sense to me. And then we kept pushing on, and we finally turned him to it. So you have to be able to keep going. So that's definitely important.
So it's the no, the rejection.
Yeah.
What else you don't like about being a founder?
I mean, just there is, constant, you have to balance many different things. So there's recruiting, there's fundraising, there's customers. So you're wearing a lot of hats. You're constantly, switching context. So sometimes, like, you just kind of, you have to realize that you have to focus on the big picture, and you have a chance of losing track of the day-to-day stuff. And some people like working on, the day-to-day and the product. So you just have to make sacrifices along the way.
I'm so sorry, I zoned out. What's the question? I'm so sorry.
What's the worst thing about starting a business? What's difficult? What are the challenges?
Well, I'll reiterate the existential dread point here. As much as it's wonderful, it's also terrifying. So I guess you sort of feel a lot of responsibility. Suddenly, if you do go through a funding round and your bank account is up and then you see the burn, that's a pretty terrifying thing to see. But there's also, whilst you're a small team, the administrative overload is a nightmare. But it's worth the pain.
Okay. Nick?
Yeah, I think admin, definitely a point we would all prefer not to have to worry about. And otherwise, I mean, it's quite intense. You spend a lot of time on your business, but I think it's worth it. And from that point of view, we'll see how the fundraising goes, how quickly we can actually grow in the end. But so far, we feel we're on the right track, and fingers crossed.
Do you think that it's harder to start a business in the crypto space versus starting a business in any other sector?
Well, I think certainly last year it was probably easier than in any other sector. I mean, people have been throwing money at the space blindly, almost. So we'll have to see. I mean, the hype is settling a little bit now, and I think we'll see a bit of a shakeout maybe in terms of the businesses that will survive longer term. And I think that's really something. It's not just looking at cryptos themselves. You've had these huge boom and bust cycles over the years, and it's great if it goes up, and it's a disaster if it goes down. And as a business, you're exposed to that as well. Maybe not directly, but indirectly. Price is strongly correlated with trading volumes, and exchanges, for example, they live off volume that's going through them. And everything else, has maybe a little less direct exposure. But I think in the crypto world, nobody is completely decoupled from the general, way the market develops. So I think that's always something to keep in mind. Don't keep a sense of humility. I think be prepared for times where things aren't going as well especially as last year. But yeah, generally I think it's a great space to be in, and I think there'll be a lot more to come in terms of innovation and great business models.
Do you have any? Sorry.
No, the only thing I was going to say is going back actually onto the kind of the fear, the sort of the point that we all fear, which is the kind of the existential dread thing. Is so we're building our protocol on Ethereum public blockchain for the moment. So our smart contracts would transfer to another EVM running consensus protocol. The fearful thing here is what happens if
What is an EVM?
Sorry. So it's the Ethereum virtual machine. So it's if you were to separate, actually I think for Bitcoin people this is a very difficult thing to separate. It's separating the virtual machine from the consensus mechanism. And the reason is in Bitcoin these things are bound together. It's the virtual machine is there, or at least was principally built to administrate the ownership of Bitcoin, which is the incentivization mechanism to administrate Bitcoin. It's a very recursive thing. So we're using the Ethereum virtual machine. We're using Ethereum mainnet at the moment. Having said that, I'm sure you've all heard there are other quite exciting protocols out there. So one is, for example, Dfinity. We're just starting to look at the moment. Anything that runs that same virtual machine. In other words, the code would be identical, regardless of which blockchain you're on. We always want to be on the one that provides the strongest consensus, the one which provides the most immutability for the assets that are created and live on that ledger. And so I suppose the one thing that we are all just we're keeping a wary eye on is making sure that we're not going to end up on the Ethereum public blockchain, and if long term that becomes a lower consensus protocol, and actually the higher consensus protocol is something like Dfinity, which, if you believe their finality times, the speed at which you can get a transaction confirmed, it's extremely quick, even compared with Casper, which is the consensus protocol that Ethereum is moving towards. So we need to keep a careful watch and potentially consider how we would migrate the smart contract on Ethereum mainnet onto a smart contract and reboot it on Dfinity. So that, I think, is going to be something that a lot of blockchain companies are going to be wanting to keep a very close watch on.
Do you have any tip or two to people that want to start a business in the crypto space? Anything in particular about starting a business, or maybe in relating specifically to starting a business in the crypto space?
I think a lot of people are attracted to the space because of the hype, which in a way is a good thing because a lot of smart people got interested. But you should probably always kind of go to first principles and what you believe in before you want to start a business in this space or any space. But I would say in this space in particular, it's really important to understand the stuff at a core fundamental level. So actually spending the time reading Bitcoin white paper, the Ethereum white paper, the Dfinity white paper, going to meetings like this, meeting people who have started businesses in this space, I think is just really important. Like, it's really important to get that strong backbone before you decide to, do whatever.
How do you decide which idea to work on? I mean, there's so many opportunities, the space is infinite. Why did you decide on this specific idea and not on something else?
Yeah, that's a great question, and I think it comes down to your DNA. My founder and I were both just big data nerds. We just like playing around with data, running data science algorithms, machine learning algorithms. So we're just a very data-heavy business, and so that really aligned with our kind of core skill sets. Well, I mean, Tom and Nick can speak to their core skill sets. That's why his business is asset manager, and he's trying to put syndicated loans on the blockchain because that's his kind of background.
So I think it's important to connect it to your background.
To some degree.
And about the co-founders, I mean, you all have co-founders. Why? How did you select your co-founders? I mean, it's still early in your journey, but so far you're still together. It's working well. How did you decide a specific co-founder? And what did you check? What did you test? How did you split the equity?
Yeah, I think for us it was quite natural. We spoke relatively early on the program, and yeah, I think it worked in terms of what we were thinking in terms of business ideas. I think Michael was quite excited about crypto things and my kind of math background and number theory background and a bit more the technical side of things. And I really valued having somebody who's come from a kind of institutional asset management background, and we're brainstorming other ideas as well, actually, outside the crypto space to do with PSD2. I think there's opportunities there as well.
Did you try other co-founders, or Michael was like love from first sight?
No.
He's good looking, by the way, Michael. He's a very handsome chap.
Yeah. So no, I think I've spoken to other people on the cohort and Michael as well, I believe. And that's the great thing about EF. There's such a great pool of talent and so many different backgrounds and ideas out there. So I deliberately took a step back, and that it took me back to crypto is not because I thought from the start crypto is the place to be, but it's really a worthwhile exercise to take a step back and listen to what others have to say. And there's so many good ideas out there and interesting experiences, backgrounds.
So I want to provoke you more. I want to provoke. It's very general. Okay, you met Michael. You wanted to do crypto. He wanted to do crypto. Fine. That's it. You just go in the street. You meet somebody that wants to start a business together. And
I think that's on the kind of business idea side. But I think there's also you've got to be able to work with your co-founder and get on. And I think on that level, it's very important as well that you kind of.
How do you know? I mean, you just meet somebody. How do you know? People maybe want to start businesses. They meet somebody. It looks great. How do you know that this is the right guy?
Well,
girl.
Yeah, I think that's why in the beginning I think you do want to keep it open, speak to others, see how that goes, how you can work. I think EF is pretty good at that, actually, making sure people work together in different constellations, try out different things, and you just get a feeling for whether it works or not, if you've got the right kind of vision. Something
if we
that
ignore
you can work
EF, I mean,
together.
EF is a very unique. So you think that even, I mean, regardless of EF or not, you think that the only way to know is to try?
I think so. Yeah, I think so. Yeah.
Okay. And about your co-founders, or how did you?
Yeah, I mean, I have to say, yeah, Zach was love at first sight. So I actually met him. He was the brother of a friend of mine. Didn't actually know how it would work, but we sat down, and Zach sort of, I just remember this, he took me right the way from sort of top level scripting languages right the way down onto what goes over a chip and the electrons and the ones and the zeros going across the chip. And he chose that opportunity to tell me that when he was about 3.5 years old, I'm not even sure whether he was potty trained at the time, he built a 4-bit or 8-bit computer or something. And actually that's what you need, by the way. So if you're going to do particularly a crypto startup, you want to, and if it's going to be a startup, by the way, where these guys they're doing something a bit different, so they're not actually writing smart contracts. If you're going to be writing smart contracts, and particularly if it's going to be handling kind of $100 million transactions plus, you better make sure you have someone who has had a low-level computing background, because they will understand what goes wrong when you sort of overflow a 256-bit register or whatever Zach talks about. So that's actually really, really important. You need the web development component as well, and that's what Arno and Joe bring. Joe's an expert from sort of, he was in consumer-facing tech, and he was CTO at Radish in Silicon Valley. and Arno actually built the tech team here at EF. And so we've got that structural side in Arno, we've got the product side in Joe. You do need that person who really understands low-level computing because they need to be understanding what's running across the virtual machine.
So let's push you a little bit because it sounds like a shopping list. You need this, you need that, you need that. You just take the people, you have a co-founding team, and off you go conquering the world.
Magic.
Doesn't make sense to me. I mean, there are a lot of super smart people. So why? And you met them in the past. I mean, what was different when you met Zach and you thought, okay, he's just smarter than anyone else, or what was this?
I mean, he's emphatically not a charlatan. That was also the other big thing. So actually, I have to say, a lot of the people that are attracted to starting businesses in the crypto space, they find an ICO an extremely difficult thing to resist. It's just look the gusts of money washing around, and we ought to catch some of it really as soon as possible. And I did actually have a white paper sent to my inbox this morning. Aside from various, so the occasional offer to ICO our business, which doesn't always go down brilliantly with me, had an email this morning about a white paper for a nurse coin. Now, I don't know whether they're going to go about tokenizing unsuspecting nurses, or I don't know what's going to happen there. But there are some things you can tokenize and some things you can't. And if you're not providing consensus, you really shouldn't be in the business of tokenizing things. So what was great about Zach is his first reaction wasn't, we need to do an ICO as soon as possible and work out the details later. He was actually interested because of the tech, and because of this idea of dispassionate consensus, this ability to process transactions for a base marginal cost, a competitive marginal cost, and he was more interested in the sort of the economic sort of rebuilding that we were going to be able to achieve, rather than because he was going to be a multi-billionaire by next week. I think that was incredibly appealing.
Okay.
And maybe to Tom's first point, I mean, in terms of skill sets, I think that's a very good point as well. I mean, you want to make sure there's a certain overlap and that you speak the same kind of language, but also if you're starting a business, it's extremely important you have as much of a skill set as possible between the two of you, and then obviously as you grow the team as well. So I think that's very important as well, and it also helps to avoid friction and really everyone being able to focus on the business rather than getting distracted on other things.
Okay, Jay, anything to add?
And on just a more personal note, I think you have to talk to whoever you want to start a business with and make sure that you guys align on vision. Your kind of life and their life is going to be really close together for the next 5 years. So they are going to have to make sacrifices. You're going to have to make sacrifices, and that's some of the more unsaid things that apart from the degrees or skill sets that are really important, like that kind of longer term life vision. And so, my co-founder and I kind of aligned on that, and I think that's probably the most important out of anything else to determine how successful you will be over time.
Let's talk a little bit about crypto, blockchain, distributed application, whatever you want to call it. You all started a business in the space. Tell us one thing that will surprise us, something that that you think is true, and maybe people in the audience don't necessarily know.
So yeah, we were looking at the data from the last week, and the prices are swinging upwards. So started digging deeper. So this is just we're running Ethereum nodes. Our analysis is based on Ethereum, but the number of new Ethereum wallets being created was around 100,000 a day, and that was steady. That was very different from like the pump up in December, where it was not exponentially, but linearly increasing the number of new Ethereum wallets being created. So this basically told us that it's not as many new people who are accessing the space, it's the existing investors who already own Ethereum. They are the ones who are trading, and they're the ones who are responsible for the increase in volume. And one reason for this could be like the US tax day just ended, so a lot of people paid off their taxes and now they're re-entering the market.
Okay. Nothing here is an official investment advice, please, just as a disclosure. Nick, Tom, any secrets that we can share?
Oh, okay, all right. Well, half the people who worked for the Ethereum Foundation are now on the beach in Bermuda. That's an interesting one. So there is this problem, and you were saying, hype you say before, hype is a good thing, and it is a good thing because it attracts talented people. Unfortunately, we're in this very strange situation. I would say redolent of 99, but I think it's actually even worse than 99, where you're finding that people are, through the ICO model, sorry to keep banging on about it, but through the ICO model are so enriched so quickly that actually there's been a talent drain. So I've discovered the few people I knew who were at the Ethereum Foundation, they are now retired and they're in Bermuda and they're barely 25. That's a real problem for the space. And it means that, you hear anecdotally that people like Vitalik Buterin, and I'm sure other people running protocols, they can find talented people. But it's more of a struggle than it was to be able to find the kinds of people who can build these base protocols. So I think it's surprising and it's worrying. It's somehow, I think crypto is at the risk of being a victim of its own success.
I think I read somewhere that between Bitcoin and Ethereum, it's the largest tech innovation in terms of making other millionaires. So more than Google, Facebook, Microsoft all together. So Bitcoin and Ethereum created more crypto millionaires, or essentially millionaires in the world. Nick, you're a very reserved person. Do you want to share any secrets with us?
Well, we've been
Can I
accused
take
of,
something out of you?
we've been accused of taking the fun out of crypto. So I mean, in a way, that's what we're doing. But what do I want to share? I don't know.
Okay, that's a
Move
banker.
on,
I'll just
move
prove the point. It's very reliable. How do you see each and every one of you bet his time and his efforts and his energy on the space, and again, crypto, distributed, blockchain? How do you imagine the world in 20 years? What is real? What is just a noise? Where are we really going to use, either directly or indirectly, things that are impacted by this technology?
Yeah, I think a lot of the kind of applications people see in cryptos, in Bitcoin, for example, or Ethereum. So if we think in terms of store of value, a means of payment, it's all still got a long way to do technologically as well. I mean, Bitcoin was designed to be a payment system, but nobody's using it for payment system yet, and it's been 10 years. So from that point of view, a bit disappointing, I would say. But I think part of the reason for that is that technologically, the whole space really scaling up public blockchains is a difficult task. I mean, in terms of
So let's not talk about the problems. I want to jump into the future, 20 years,
Sure.
30 years, 50 years, where the world is impacted, but for real, with this technology.
Yeah, so I think these technological problems can be solved, and then I think there is a chance or a scenario in which cryptocurrencies will be used for these applications that people have envisaged, like payment, store of value. Ethereum has got a huge amount of potential applications via their smart contract capabilities.
How does it change my life? I mean, so I'm paying now already with my phone, so I'm going to pay in 30 years on the blockchain. So I'm already doing all these payments, store of value. How is this going to change my life? I mean, the phone made us use, I don't know, Uber and things that we didn't think about before. How does Bitcoin bring the same change, or Ethereum, or any other of these technologies?
I guess one use case I'm kind of excited about is identity, and that's something like this is the fourth continent I've lived on, and every time can't get a bank account, I have just terrible problem traveling. So I think that's something where if you take out the central parties, in this case governments, that are responsible for your identity or your credit score. That could be something great, where you have this one unique identity that is secure on the blockchain thanks to Zach's protocol, and you can use it in any country you go, so you can get a bank account anywhere. Your credit score, my credit score from the US is used here. I can get car insurance here, so something that's a real use case, I think, that might be 5 to 10 years away.
Two examples that I've heard that I really liked. One is just related to what you said. So democracy now is based on voting, but executing voting directly from the public is pretty hard, right? I mean, it costs us a lot of money. We need to go to this little school or primary school just around the corner to cast our bailout. There is a lot of people needing to verify. There was a lot of controversy a couple of years ago in the US about the election. Yes, yes integrity, no integrity. Imagine that because of public blockchains and private keys that you own your identity, and the government could set up a referendum cheaply, easily, fast. What does it do to democracy? How does democracy look in a world in which your phone is one, your identity is proven, and you can communicate directly with the government? It's one interesting example. Another one, which is quite maybe counterintuitive, think about more electricity to people off the grid in developing countries. I know it sounds a little bit of a crazy leap of faith, but I heard about a project in which people build a new type of a battery. So it's a solar battery that you can put anywhere in the desert, very far from the grid. And if you have internet connection, you can use the excess electricity to mine cryptocurrencies. So suddenly you have a mechanism to finance or subsidize poor people or people off the grid buying batteries. So this is kind of interesting to think about non-linear impacts of this tech. I'm not saying it's going to happen. I'm just saying that this kind of future in 50 years, think about somebody sitting in the Sahara with a little kit, solar kit, a battery, and a Bitcoin miner. I mean, it could happen. It's not that far-fetched.
Well, in terms of identity as well, I think the debates going on around Facebook at this point in time are a good example as well, how that could change people's lives. Yeah.
Absolutely. Tom, any futuristic visions?
Well, I guess it's gonna make hostage taking potentially a slightly wider margin business. I mean, you know, the idea that there's so much bound up in a single private key is quite a scary thing. Obviously, what you do is actually what we're doing is you write smart contracts that protect against that. So, for example, what we're doing is we're whitelisting people who can buy an asset, and we're building sort of closed systems of economics, at least early on, but on a public blockchain. I think there'll be one very big. I think, by the way, there will be no token huggers. Token huggers will be a thing of the past. They're a blip in history. I think people will legitimately hold truth capital, which is a word along with token hugger I'm trying to get into circulation. When we talk about truth capital, I mean, I'm actually really referring to a kind of post-proof of work world. I'm talking about proof of stake, a slashing algorithm, which says if you attest correctly to the record of events on a public blockchain, you'll receive an income for providing a goodwill attestation. If you behave badly, and you're found to behave badly by other people on the network, your capital will then be slashed. So it's rather like a credit default swap or a bond. You know, you've endorsed a sequence of events with a sense that you agree to them, but if you've got that wrong or if you've malfeased, you'll be slashed. I think truth capital is a new kind of capital. It's a working kind of capital. It's absolutely not the kind of capital that you see bound up in, I won't name names, but a good few ICOs that are being issued and still being issued. But I think truth capital will be something we've never really considered before, we've never had before, but will be a new way of holding capital and being able to directly deploy it into the economy. Not having gold, this sort of capricious source of value, sitting outside the real economic system, although it can be a very useful buffer for the economic system. But I think truth capital will be the great innovation to come out of this. And of course, that truth capital surrounds a blockchain, which means that everyone can share one version of events. So we all now have only one place to point to for our record of events, not thousands of economic players all reconciling furiously against one another in this kind of crazy Dickensian way that still goes on using computers every bit as much as it did when we were using quills. So truth capital, I think, is going to be the thing that we're going to have in 30 years that we won't be able to imagine having lived without.
Sounds like a good name for VC, Truth Capital.
Yeah.
I'm going to have one more question, then I'm going to open the stage for questions, and then we have pizza, 20 minutes or something to look forward to. One recommendation for a great book or a great blog or a great article that you think people should read, or something that you're really excited about?
Well, so on the book side, that's a good read. The Attack of the 50-Foot Blockchain, which I can really recommend. It's by an IT professional who's been following developments in the space, and it's a pretty good take on all the things that have gone wrong over the years. And it's got a great list of references, very, very well researched book.
Can you repeat the name?
The Attack of the 50-Foot Blockchain.
Fantastic.
Yeah, I think you should read the Token Analyst blog, tokenanalyst.io/blog, if you really want to understand these crypto assets at a deeper level.
Okay, well, Jay's just taken my recommendation. One thing I have to say, Rise of the Token Hugger, which is a blog I wrote about 2 months ago, and I hope it's worth reading. But no, seriously, I think the best person that you can read in this space, and I would strongly recommend reading it, is Vitalik Buterin. Not only is he's an incredibly brilliant and original computer scientist, he's also an incredibly good communicator. And there's one blog post in particular, which I think is called Why I Learned to Love Weak Subjectivity. It sounds complicated, but it's really worth reading, because I think conceptually we're all going to have to get our heads around a post-proof of work world. I think this is we're going to struggle to keep on burning resources in the way that we are. And then the question is, how do you trust the version of events that's being served to you by a node, whether it's an Ethereum node or Bitcoin? Bitcoin may one day go to proof of stake, who knows? But I think that's a very important conceptual blog for anyone who really wants to understand the fundamentals of blockchain.
Can you just repeat the name of the post?
Yeah, it's called Why I Love Weak Subjectivity. Or Why I Learned to Love Weak Subjectivity, I think.